Hey guys, it's Simon with Trade and Perform Coaching. Wanted to do a quick trade review. First, I wanted to flash up the legal disclaimer here really quickly and then get into today's price action and do a little bit of education, a little bit of learning so we can be better tomorrow. So, turns out, don't have to read the whole thing, just close to the whole thing. So, important disclaimer reminder. So, important points. The webinar is for educational purposes only, right? I'm not recommending to buy or sell any futures contracts, options contracts, currency trading. Both or all three of those have large potential rewards, but also large potential risks. Be aware of the risks. Importantly, know that you can lose all your money trading leverage and trading futures. The most important message I'd like to get across there. The website's not a solicitation to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this channel. Past performance is not indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So, a couple things. First of all, I was out most of the day. I was here for the open. I did the market preview, and then I bailed. The reason I bailed, my wife's sick. There's two issues with that. I don't trade very well when my family members are sick, and secondly, she needed me to take her to the doctor. So I wanted to go in just and show up. You know, one of the challenges of trading in the summertime are the slight variances on conditions. We can have markets that don't necessarily line up with each other. That would be a good way to put it. Don't line up with each other. And that's what we had coming into the day. So I want to show you this. NQ, if you look the prior day, so I'm going to blow this up. NQ had a beautiful rally on Wednesday, right? We were opening near in the top third of that area coming into the day, okay? So that's great. If you look at the problem with that, or the only problem there was when you look at ES, ES did not rally when we came into the day on Wednesday. We opened up. So this is our Wednesday right here. We opened, we pushed higher, we rolled lower all day, and literally ES and NQ were on different trajectories all day long. So someone will ask, well, what's the big deal about that, right? It's just not normal. If you'll line up a chart of NQ and ES, and I'm not going to do it right now, but if you'll just go and start a chart where you have NQ and ES, you'll see that 90% of the time that they kind of overlap one another and they stay on course. They just don't deviate from each other too much. And that's a very, very important concept because the leadership in the tech stocks usually pretend follow-up from ES, right? And the other weird thing is that while NQ was tanking in this most recent correction, ES barely went down. So you would suspect there's only one or two reasons for that, right? Either the entire juicing of the NASDAQ push to the upside came from a liquidation from institutional traders on the ES side, right? Therefore, you would get an ES sell and a rotation into the NASDAQ 100 biotech index in particular, right? Or you actually have very heavy sell pressure underlying that there's institutions selling ES while NQ is getting bought, and they're using the strength in that to unload some of their ES position. I'm not smart enough to know which one it is, but I am smart enough to know that I get cautious when those two don't line up, right? So that disconnect continued. I would have suspected a couple things, and I said as much in the preview, that first of all, we would have been able to get over and open over 34. This day would have looked a lot different if we could have gotten European or Asian buying to push us up above 34, and I'll kind of draw that in, what that would have looked like instead. So see how we came into this. Let me spread this out really quick so everyone can see this, and how the picture would have been very different, and it was over on the NASDAQ in the morning, right? So, as most people know who are in the room, and again, these are primarily geared towards members who are in the room for continuing education from what we learn in the morning, then we follow it up in the evening by doing our homework. What can we learn from what we saw in the market, right? So, if you look here, right, the market opened up and we opened right into resistance. This is Wednesday's volume point of control. This was the opening print right here, and this was a key resistance area, this yellow zone right here, and this was Globex high. So we open up underneath Globex high, right? That's the first 5-minute print. We push out of the zone. We got underneath immediately on the first 5-minute bar under the prior day's volume point of control, and then we pushed down, came back up for another test right into Econ, rejected down, rejected down, rejected down, and then finally we drove through there. And I tweeted on the stream, even though I wasn't here at this point, that once we got above, and the plan was once we got above 32, 34, buyers were in overall control as long as we could hold above 36, 34. Really was the key location. Give me just 1 second. Sorry about that. I was getting blasted. So we got this rejection, so I'd like everyone to view this in a little bit different light, right? If we would have opened from above in this area, and this is a micro composite volume point control, so we opened here and we had pushed down into this location, this would have made for a beautiful long side push right out of the gate, right? But because we opened up underneath, we got constant resistance. And then the other characteristic that's been common in summertime, if you go back through each of the days, has just been this constant chop that we've gotten in the first hour. So again, I would not put much stock into what happens in the first hour, because if you'll look at almost every single day, I'll go back to yesterday as a demonstration, chop, pure chop for the first hour. Go back to the prior day, all the way at the open, pure chop for the first hour. So I don't put a lot of stock right now in summertime into what's going on in the first hour. The only difference here is if we could have opened up today above this key resistance, the market would have had a lot easier time going down. So I want to show you what that looked like on the flip side on the NASDAQ chart, right? And that was this. We did open up essentially into Wednesday's high, and you'll notice this was the white zone, buyers in control above, sellers below, and we rotated directly down into this key location. I can't tell you how important this is that we opened up here and pushed straight down into this location. This was a key long area, and you can see this is what, so if you'll envision, had ES opened just the same and come into the same support area, would have gotten this beautiful rotation back to the upside. And this was a great trade. This was worth 74. This was worth almost 30 points of upside move. That's $600 a contract from this key location. So really, really important that you know, where's your money coming from? What are those key locations that they are? What are the key locations that you want to be able to take advantage of while you're trading? And which side of that support resistance line do you want to be on? And there's another step to this. These support resistance lines, if you've been watching the videos for a while, you'll see that it's not like a random some work, some don't. Those key areas that I list, particularly the white zones, consistently provide the room and myself with key trading opportunities, right? And also notice, because we know that those are key locations, we can trade them calmly. On the occasion when they do fail, and they do sometimes, right? But on the occasion when they do fail, we simply make the adjustment to go, okay, I know I can take this trade, and this is really important for people who are trying to learn how to trade long term. I can take this trade 100 times in a row, and I know my win rate's going to land somewhere between 75 and 85%, let's just say. Of the time, I'm going to get at least a 2-point rotation under most circumstances. I'm going to be able to use a reasonable stop, right? And often I will get much more than just a simple, in NQ, a simple 5-point rotation, or in ES, a simple 2-point rotation. Often they're worth 5, 6, or 7 points or more of rotation. So my RR gets back in line and lets me profit from those opportunities. So let me see if I have anything else that I wanted to cover for tonight. Oh, I did. One of those rare days that if I can pull this over, here we go. One of the rare days where So if you look from a TPO standpoint or time profile, right? The volume point of control for yesterday closed down here at 24.32. It's a key area from the volume profile standpoint. The TPO, which I'll bring over here really quick on ES, the TPO point of control is up here between 35 and 38, right? That's a key area overnight to hold below. So the reason why I bring that up, it's really rare to have those two not match up. What it tells you is we didn't spend a lot of time in the lower area, but we spent a ton of volume clicking off. Also, we could not get below or above, as you can see here, Wednesday's high. These are still the key areas in terms of judging whether we're bearish or bullish. Bullish above, essentially 24.40, opens us up to push, although we have key resistance points above in ES. And if we can get below and hold below this 24.27 and make an extension, we have 21, 16, 12 to 10, and then 05 to 03 as key levels below, right? So at any rate, that's kind of my 2 and 3 cents about how the market is shaping up. I think it's very, very important. Oh, there was another very important point here, and I don't want to let it slip by without covering it, because I think it is massively important. There's a key trade setup that we have in the room, which calls for when we break the initial trade to the upside, right? So you'll see we have this horrible push at the end of the day. So I have a couple of basic trading rules that keep me really, really safe, right? Don't trade the last hour of the day. Don't initiate a position at that point, right? As you see here, I had this outline of this break of the IB high, and we were looking for this 50-60 retrace. I don't know if you can see that in here. This is a high odds trade. But guys, the high odds trade, as I've said many times in the room, right, that dissipates once we get over past 1:30 in the afternoon. This 50-60 retrace in here drops to about a 50-50 trade. That's not high enough for me to take at the end of the day. And you're jumping in where everyone's forced to liquidate their position. And unless you have just something really amazing to key or entry or exit off of for some reason at that point, right, I would not invest a lot of money in taking the trade in that area. That's really the nicest way I can say that is it's critically important that you protect your flank in the last hour. And the other part is if you haven't made money to this point in the day and you're flat or you're down, right, why are you going to risk, if it's a down day, turning it into a horrible day? And if you're flat, you have nothing to work against, right? Why are you going to risk going negative on the day instead of just walking out? Your highest odds locations to make money during the day lie between 9:30 and 12 p.m. Central Time, right? So why lay yourself out? It's not that you can't make money in the afternoon. In the proper market, you can, right? But if you haven't been able to build that P&L by the end of the day, why lay yourself out in that way at the very end in a desperation move to make money and get smoked? If you were short from up here, right, that's fine. I have no issue with that. I had no key level to short off of, although you can see we had the biggest push and tick. Guys in the room, I want to point this out so y'all know how to set this up. Biggest push and tick in the afternoon, right? No new high, right? That was really the key there for getting a potential roll to the downside. Again, I would not put myself in a sacrificial position to trying to catch a falling knife in the last hour, so I don't have to recover my P&L, which I really, really, really cannot stand to do. It really hurts to get drawn down. So again, remember, the entire purpose of the room, right? Stop the boom bust process. Buy into a trading process with high odds trade setups that you can trade on a regular basis. We know we're going to get 1 to 2 high odds setups every day, right? Stay within that plan. When things go wrong or if you go off plan, work your way back to that trade plan as soon as possible, right? And then finally, understand what it's going to take to double your account. What kind of P&L do you have to see in your trading account and over what time frame? And I don't care what that time frame is. If it's 5 years, 12 months, a quarter, it's kind of hard to do it in less than that without some really crazy leverage setups, right? But whatever your number is for setting up and attacking your rate of return, whatever rate of return you're targeting for your account, okay? Know what that number is, and the reason why I bring that up is so important. I see a lot of guys with small accounts, $20,000, $30,000, $40,000 accounts, right? If you have a $30,000, $40,000 account and you're averaging $200 a day trading 2 contracts, right? That's reasonable leverage. I'm not making that as a recommendation as to what leverage you should use, but for me, that's reasonable leverage. 1 contract for every $20,000, right? And you're attaining that $200. Do the math, guys. If you average $200 a day, there's 5 trading days, 4 weeks. Run that out. Assume that some days will be bigger. Some days you'll have drawdowns, but hopefully by the end you're coming out with a 2-point average P&L through that course. You more than double that account by the end of the year. So, and the reason why I say that is I see a lot of guys that'll be up $300 on the day, right, on a small account, and they'll go, well, I didn't think I was up very much, so I was up 300, and then they'll end up flat on the day, or they'll end up negative on the day, and they don't have any eye towards building that account, getting the stability they need to be consistent, right? That's a big deal. And so, at any rate, that's my 2 cents about that. I thought the market was difficult to trade today. I wasn't here, but when I look at how this process runs, my highest odds setups would have been the 50-60 back today after this break, right? Or shorting this location, but I'm not keen on shorting right out of the gate, especially when NQ was showing strength early on. And if I was going to trade anything today aggressively early in the morning, it would have been this first push, and I said as much, into NASDAQ. But then the last piece, and I emphasize this in the room, and I say this again, know what your triggers are for bad trading. Mine is when I have distractions outside of the market that are pushing into my marketplace activities. When I have those distractions, I know, hey, just stop trading, right? And figure out what those triggers are before you get to the point where you are triggered, you're over trading, you're like, how did I draw down like this? Well, understand usually there's a series of events that take place long before you've over traded or over triggered, and go, okay, I've made a mistake, but I can stop trading right here. And sooner or later, and I know I'm going off on a little bit of a tangent here, but the point of discovering what your triggers are, and you can do this through journaling, is that the earlier you can detect them, right, the less you'll stop fighting them, and you'll just go, hey, I know I don't trade well under these circumstances, right, and I surrender my hand. I fold right here before they ever have a chance to take any money, and then you can come back at whatever point you are prepared to trade well, right, the distraction's gone, or you're refocused, right, and you're ready to go. The other thing I would say that's very, very important, have a practice that keeps your mind calm. I meditate twice a day daily. I try to post all of them. Meditate. It lets you know how, the point of the meditation and the breathing exercises is that lets you know how you feel when you're relaxed, right? If you're relaxed, then you can recognize, hey, I'm not relaxed right now. I'm tense. My neck is tight. My back is tight. I'm not in a let the market come to me mode. I'm in a let me force the trade kind of mode, right? And process is everything, and recognizing when you're in a condition where you may not be able to let process pay out or play out, that's where you've got to stop and get refocused. Anyways, my name is Simon. I'm a Trade and Perform coaching. I do both one-on-one coaching, and I run the education for the trading room. And we do a lot of really great things there. And the primary objective is to move you from a boom-bust trader or a losing trader to first a break-even trader and then a profitable trader. If you'd like to come visit us for a couple of days, email me at tradeandperform@gmail.com, and you're more than welcome to have a 5-day pass into the room. Hope everyone had a great night. I hope everyone had a great day. Stay on process. Stay focused. Don't blow yourself up. There's no need for it. Okay, have a good night, guys. I wish you all the best.